Hello guys, welcome back to the channel. I hope you're doing well and I hope you are improving in your trading. Let me start by emphasizing that I am not a financial advisor. Guys, do not use anything you hear from these videos or anything I post on my social media accounts as a financial advice, because you already know that I'm not permitted to do so. So I previously tweeted something and I was asking, does anyone have an idea why pound dollar is going up even though it took previous days high? So as we know, as ICT traders or those that are using the concepts of ICT, we already know that price moves by two things. It moves by these are the things that moves the market. We already know price is moved by liquidity and then imbalance, right? So these are the two things that move the market. It is not order blocks. It is not support and resistance. It is not Fibonacci retracement. It is not whatever you may call it. It is not anything else apart from these two. It is liquidity and imbalance. Price will seek liquidity. Price will seek inefficiency in the market. Price will always replies to these areas. It is not supply and demand. It is not what is this? Breakers. This is what causes the market to move. Now, you may agree with me on this or you may disagree with me with this. It doesn't matter. It doesn't matter what I think. It doesn't matter what you think. Whatever it is, the market moves and something moves the market. And now, according to my understanding and according to my research that I have done through several ways, especially, for instance, by listening to ICT, following his teachings, and then by personal research, this is what I concluded. By believing the fact that the market is moved by liquidity and imbalance. This is a fact that nobody can, move me from, right? So these are the two things that moves the market. Now let me also say something, guys. Price does react to several things. The market reacts to so many things. Okay, price reacts to imbalance, it reacts to breakers, it reacts to order blocks, it reacts to support and resistance. Yes, you heard me right. Price reacts to support and resistance. It reacts to moving averages, EMAs. It reacts to VWAPs. It reacts to so many things, and that's why we are so many traders, yet we are using different concepts. Even though we think that, I might think my concept is the most accurate one than the other one, but nevertheless, not all professional traders are using ICT concepts, you know, and not all professional traders are using supply and demand. There's a varieties of strategies and concepts. You just have to use whichever works for you. I started with support and resistance, um, double tops and double bottoms. It never worked for me. I moved to supply and demand. Never worked for me. The moment I switched to ICT, that is where I found consistency and I could see the market um, moving and understand the reason why the market is moving. Even if I miss a move, I would look at the market and know why it moved and why it had to replace the area where it replaced to. All right. So the market reacts to so many things. Even moving averages. Believe me, you put a moving average on your charts. See how price keeps respecting it. So what am I saying is, um, it's not so difficult to find a strategy. That is the easiest part about trading. The most difficult part is being able um to how do I call it? Being able to have your um your character line up with the strategy you are using. Let me say that again. The difficulty part is to line up your character as a piece, as a person, as a human being, to line up with the strategy you're using, because it has to be in accordance to your character, to who you are. And that's what most people call psychology, because we say psychology, and we cannot even define what psychology is. Psychology is basically being able to understand yourself, understanding yourself, who you are, and then connect that to the charts, and then you will find the type of trader you need to become. Swing trader, short-term trader, scalper, day trader, right? But hey, that is not the reason I'm recording this video. Anyways, I'm supposed to be saying up what I said on the 9th, why the pound dollar was going up even though previous day's high was taken. So we already know that when previous day's highs and lows are taken, in most cases price is going to reverse, you know, to have a reversal. But it's not the case always, right? And let me also mention one thing, guys. If I say this is a point of value, right? And price, you know, price was going up and like this, right? And I say we have a point of value somewhere here where we think price, if it comes back in here, then will go up. This is where most people make a mistake. And the sooner you realize this, the better. Being this area being a point of value, I am not telling you that when price comes back here, you will buy. It means on this area, we could either buy or we could sell. I think that comes as a shock to you guys, right? But that is the truth. A point of value, be it an order block, a breaker, whichever it is, support and resistance. If price is going up and I say this is a point of value, or any other person says this is a point of value, they are not saying this is an area to buy. They are telling you that if you watch this area, price is going to react in a certain way that it could give you a setup to either buy or sell. But higher chances is that price will give you a confirmation to buy. But be ready, if price defies your setup here, it will give you a setup to sell. What we call, right? Something that is called a continuation setup. You've heard of trend continuations. How do you find them? If you find, if you miss this trade, any other setup in here is called a trend continuation. It doesn't mean if you cannot find a trade here, then you cannot jump on in here. Oh my, I don't know if you'll get this. Let me repeat that. One of the difficult part of trading is that so many traders, they want to pick tops and bottoms, which is dangerous. Instead of you getting on the trade here, you can hop on right here. Not like when the candles are moving up and then you just buy. You've got to go lower on the lower time frames and have continuation entries. This is mostly the model that ICT trades. Okay, and then another thing is, if price is coming here, this, if it is a point of value, price will react. It won't go through. And the moment it goes through, it will create a continuation pattern here for you to sell. So I hope you took note of that, and you are going to check it out on the charts at your free time. So I was asking, how come the pound dollar is going up on the 9th, even though we took previous day's high? So if I put on these indicators to show me the previous day's high, this right here, here, this was the previous day's high, and I'm going to, yes, PDH, meaning previous day's high. So price took it at London Open. This candle is London Open, the opening of London session. Price went through, and we anticipated reversal, right? But in this case, price just kept going up. And I tweeted, why is the pound dollar going up? So if we compare with DXY, but I don't use DXY, guys. I just put in here because I thought I should use it on this video, but I actually don't use DXY. I just go do my analysis right away in GU or EU. I don't do DXY. I don't. All these annotations, I put them there on the 9th, but I usually don't check on DXY. So if you check on DXY, we have this high, which is, we know above these swing highs there is liquidity. We have this order block because price took out this high and then price sold, so this is an order block. Price kept selling and we never came back into this order block. Price went up, touched the order block, and then price has been consolidating in here. Then price also took this low, and then after taking it out, price started buying, and then we block structure, and then we have imbalance right here. This is the imbalance, and if you check, if we check, this is where 50% of the imbalance is, and price hasn't come back into it. H4, on H4 we see price touching that order block on the higher time frame. Price grabs the liquidity from here, then breaks structure here, price returns into this order block, and then price sold and breaks this structure here on the 9th. So when I saw price touch this order block and then it's selling, it made sense to me that pound dollar should also go up because we actually did the same thing. I'll show you. So price broke this structure to a downside, then we broke this structure in here to the upside. This candle came back to retest these order blocks, price went up. Now already by looking at this formation here, it tells me price is reversing. So when I saw this, I understood why price is not intended to come back here, because we've already created this formation by grabbing liquidity, making this smart money reversal. But then when I checked on the 4-hour time frame, we have this order block, we have this imbalance in here, we have this order block that price never replaced to, never came back into again. So I marked the order block, of which I tweeted. Let me see if I can find it. Yeah, here. Okay. And then when I switch to H1, now the imbalance is even more clear. Let me remove these lines. Now the imbalance is even more clear. And then we see price here on the 3rd of February. It came down, short-term low. It broke the short-term high. This candle with so much momentum went up, and then immediately price started selling. So this candle right here is a breaker. That's a breaker, and now I had to adjust to the opening of this candle, and you see price came into the open of this candle, and then we started selling. Okay, so I understood that this formation was only to take price up to mitigate this breaker here, or order block. Basically, breakers and order blocks are almost the same thing. If you don't want to confuse yourself, because they have this, they carry the same purpose. So if you don't want to confuse yourself, breakers and order blocks, you can just say an order block. It's the same thing. You don't have to confuse yourself. And then if we switch to M5, M15, let me check M5. So M15 is better. There is no break of structure in here, but we have a fair value gap in here. You already know me, I don't take trades based on fair value gaps, but some of you do, and that's why I didn't take this trade here, because it's not how I make my entries. So you enter here, your stop loss is here, and then what would be your target? The target is into this structure, because price, this previous day's high is no longer a previous day's high. It becomes a break, a shift in structure, or break of structure, whichever you call it, break of market structure. And then if I use my fibs to here, you see this would be your target. You see this candle tapped into here, and then price went up. Okay, to be honest, I thought price was gonna go back up because we had broken this structure. But then on H1, when New York session opened, I realized that price had created a bearish order block. Then I was like, okay, now we have two scenarios that are opposing each other. This structure that I'm supposed to be buying from, but then we have this opposing structure. If you've been watching my videos, you know what I mean by opposing structures or opposing order blocks. I'm not gonna explain them right here because I would just assume you've been watching my videos. And those who also trade BPR, here we have it here, but I will just continue to use my bearish order block. I don't see it here on M15, but I already know in my mind that on on H1 it's there. Okay, then M5, there we go. You see, now that H1 order block has completely disappeared, but I don't care because I know on the higher time frame it's there, so I don't have to adjust anything here. Now we have a shift in structure. This is in the New York session. A shift in structure after a grab of liquidity. Then your entry goes right here. Your stop loss above. I don't believe in tight stop losses. I don't. You have to put your stop loss where you know that it is safe. If price takes out, then price action has changed. Like now price is gonna buy. You don't have to put it so tight because right here price can kick you out multiple times before it starts selling. Okay, so my stop loss here. And then your target, you don't even have to always have a target. You can just go in when you have your 1:2, 1:3, and you come out. You don't have to have targets, but if you were to close here, that would be almost 50 pips. Okay, so to answer that question, I understood that pound dollar was going up. Number one, because we have DXY going down, and we can see the reason why it's going down. Higher time frame, PDRA, we have H4 order block, price replaced into it, and then we started going down. And now if you switch to GU again, on the other hand, we go on the daily, we have this imbalance from here to here. We have, why is it an imbalance? Because we have one side of price action, one side of price delivery, like on the bearish side, and we don't see any up candle, up close candles in here, so that is an imbalance. And let me see, so from here to here, you can see price came into 50% of that imbalance. All right, but then, so what do I think next about pound dollar? First of all, we have an equal high. This swing high and this swing high are on the equal levels. We have a swing low, that is sell side liquidity. Okay, if we check on the weekly, what do you see? On the weekly, we have this swing high that was taken out. After taken out, price came down and then started going up again. So this swing high, I no longer use it. But then we have something else. We have this structure. This structure that price touched, and instead of reversing, price kept going up and it took it out. Now remember what I always say in my videos. If price takes out liquidity, for example, if we take out this high and price is above it, it will act as support for price to continue up, or it will break below, retest, and then continue going down. And that's why ICT teaches what? This smart money reversal. Why? Because this short-term low has been taken out. You see it? Price goes up. When we touch it again, price has high possibility of rejecting and then continue going up, or it will break, retest it, and then goes down. So it's the same way with market structure, guys. It's the same way with structures. If I take from this swing high to the swing low, okay, then go on your right, where do we find ourselves? On the weekly, pound dollar has been rejecting, the, what do you call it? People call it 50% area. Others call it what is this? I mean, they call it so many, but I call it my golden zone. I call it golden zones because I used to fib numbers 50 and 62 instead of just 50%, and I have reasons behind it. Okay, so but anyways, it doesn't matter what you use, but price has been rejecting this area on the weekly time frame, and you can see there's no single candle that has closed. Even this candle tried to go down but then ended up closing up. Okay, so if I switch to the daily, what do we see again? We see price is within this order block. This order block, why? Because we had price taking liquidity from here, taking liquidity, and then break structure, and after that formation, price never came back into this order block. So now price has touched the order block and rejected, and then if you watch ICT videos, you know what this candle is called. It's called what is it, propulsion order block or something. But to make it easier, I call both of them order blocks, and price is still above it. All right, so we'll see what happens next week. If price will go through this zone, continue going down, or if it will reject this order block and this propulsion block to continue up, since we have equal highs. Because on the weekly, price hasn't closed below my golden zone, and on the daily, we are still above this order block. So it could be the next week will break through, or price will reject and then go up. We'll see what happens. And if I check on the DXY, let me start from the weekly. What do you see? Price left this order block, fair value gap. We are still inside. We haven't even closed above. Can you see that? We are still inside the fair value gap. We are still within this order block. So from the low of this bearish candle to the high of this up candle, we are in my golden zone. Okay, on the daily, what do you see? Price touched the order block, rejected, but then price is also rejecting below right here, right? So it could be that price might want to touch it again, then reject to go down, because we have imbalance right here also. Look at this imbalance. Okay, why? Because we had only one side of price delivery. We don't see any down close candles. So we could see price coming to cover it, touch this order block to continue up, or price to simply uh, come above here. When you see a candlestick closing above here, okay, it means price will continue up, and this now is going to act as a breaker block instead of an order block, and then to continue going up. But from what I'm seeing on the weekly, on the daily, we still have some bearish move. But the moment we close this candle up, it will act as a breaker, and then we continue going up. So this is it for this video. Currently, these are the pairs I'm trading: euro dollar, pound dollar, and Nasdaq. And the reason why I'm no longer using DAX, I'm no longer trading DAX, it's because DAX on the block I'm using, it has changed. The spreads are too high, and then the price action has been really bad with tax. So I removed it for a while until it clears up. Otherwise, at the moment, these are the assets that I'm trading. That I'm trading. I beg your pardon. Yeah. So thank you guys for watching this video. Thank you for your support. Thank you for following me. And you already know, guys, that I try my best to answer your questions. I may not answer you on time, but you know that I do respond to you as quickly as possible. And I may not answer your questions sufficiently the way you would want it to be, because we are probably trading different models, different strategies, and I am not actually here to teach you guys, because I am a student of ICT, and I don't intend to change that. So I do not consider you as my students. I have no mentorship. I basically believe that I share what the little I know, I understand about the markets, and in that little you'll be able to pick one or two things that will be able to help you in your trading development. I do not consider myself as a trading mentor, all right, but I'm just trying to keep it simple. So thank you guys for watching, and until next time, yeah, stay blessed.